Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome back to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a huge welcome to the community and to our journey of investing. My name is Bryce and we have a cracking episode today. Joining me, as always, is my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. I've actually been away for the last few weeks.
You have been.
Not sure if people realise that.
Yes.
My presence was missed.
Well, look, we've finished the winter series, so a massive thank you to Superhero for supporting that, and we are back with regular programming today. So, big episode. Ren, you're back. We've got some key headlines just to catch up on. We've got Book Club. I think it was Jim Simmons' How to Beat the Market. No, not How to Beat the Market. The Man Who Solved the Market, sorry. And then we're closing out with a community question on superannuation and off the back of some of the content that we've been doing over the last month or so on super. So a jam-packed episode. But Ren, let's start with Turkey. Tell me about it.
It was good. I didn't really know what to expect, but I'm pro-Turkey.
Okay, yeah.
So country, less the leader.
Yes.
But went there, joined mum and dad who were doing a big pre-retirement trip.
Yeah,
and,
nice.
My two sisters came as well, so it was nice to do a family holiday.
Yeah.
It was warm, which was nice. Coming back to Sydney, you've been
cold. Looks like you go to the snow.
Yeah, just central to like every chapter of history. Greek, Roman, early Christian, all through the Middle Ages. Super interesting, yeah.
Highlight?
Gallipoli was a highlight.
Nice.
Just because of, what it is and seeing it. Cappadocia, where they do the balloons. Yeah, that was pretty epic.
What happens? They all take off from the same spot and then just... Like, it looks like there's hundreds.
Yeah, it is. It's 200. Yeah.
200?
Almost 200.
Wow.
Yeah.
Wow. And how far, how long are you in the air for?
For like an hour, about an hour and a half.
Do you float far?
Yeah, well, so it depends on the wind. So they get up there. So it happens most days in a year. They go up, but the wind could be blowing in different directions.
Yeah.
So then they have teams on the ground that literally, when they figure out which way the wind's going, they'll drive to a pickup spot. But you just drop in like
wherever.
Just like on the ground. It's like not a designated drop-off spot.
Yeah.
And so depending on the wind and the direction of the wind, different days you could go different distances.
Interesting, yeah. Because you could get stuck in like a serious jet stream.
I don't know. Yeah. Exactly. And then for people that want to do a Greek islands trip but on a budget, one thing that many Turkish people were excited to tell us is that many of the Greek islands are actually closer to mainland Turkey than mainland Greece.
Nice.
And so you can go to the Mediterranean towns. One that we went to was Kash, which was pretty good. K-A-S.
K-A-S.
Yeah.
Well, there you go.
Yeah, it was good. I'd recommend it.
And the food?
Food was good.
Yeah.
Food was good. It wasn't...
Standout.
It was, yeah. It wasn't like a lot of meat, a lot of bread.
Yeah.
Which was great.
Yeah.
Probably put a few kegs on over there.
Yeah.
But it was good.
Nice.
Yeah.
Well, welcome back. I think we want to start the episode with what has been missed while you were away.
Yeah, what's happened?
Wow. Well, I'll give a couple of quick headlines, I should say, or a bit of a summary of where things are at. Let's start with inflation. We've got mixed inflation news globally.
Okay.
We'll start here with home.
Well, hold on. Let me put this in context.
Yeah.
Turkey has inflation running at about 70%.
Okay,
so compared to that,
we're doing fine. Wow, did you like...
Not to derail this, but it was a real reminder of why inflation is so important. Because it's so high, a lot of things get priced in euros or US dollars. A lot of people would take euros or US dollars. But like classic example was the airport, the Istanbul airport. Everything was priced in euros, but then you would go and they would scan it and they would convert it into lira at the checkout. And that's just a classic example of a currency not being stable enough. So rather than having to reprice things
every
constantly,
day.
you just price it in something in
stable,
euros.
yeah.
And then when you do the conversion, that would just tick up and up and up
Wow.
as the lira gets weaker.
Wow.
And it's so destabilizing not being able to trust your currency.
Did you hear so you travelled with like a local tour guide?
Different tour guides for like different things.
Did they comment about the situation?
I feel like you definitely get a sanitized version. There was a lot of reluctance to talk about the economy and Erdogan.
Yeah, because of the value of tourism and not wanting to make it seem. Yeah, interesting.
4th most visited place in the world.
Really?
They kept claiming that.
Country, just
Turkey.
full stop.
Yeah, 4th most visited country in the world. I think that includes airport transfers.
Okay, sure.
So I think they're like a big commuting
What's the
hub.
hub for what?
What do you mean? It's
like,
literally the center of the world.
Yeah, but isn't that what the Middle East have tried to establish themselves as?
Turkey's not far from the Middle East. But it's literally the crossroads of Europe, Africa, and Asia.
Well, if they're claiming it just through airport transfers, I don't think that quite counts.
Well, 4th most visited country in the world was the claim. Also, I've got to give a massive shout out to Turkish Airlines. Very good. Mm-hmm. And you could do better to Malaysian Airlines.
Oh, really?
Because they code shared. So the Australia to Kuala Lumpur leg was Malaysia. Poor selection of movies and drab planes both times.
Short Malaysia.
And then Turkish Airways from KL to Istanbul.
Yeah.
One
really
of the
good.
better selections of movies and one of the better airlines I've travelled on.
Nice.
So
long Turkish Airlines.
Also, one piece of news I did say, did you say Qantas has dropped out of the top 20 airlines in the world?
Bombed.
Down to 24?
Yeah. I think their highest they ever got was 4th.
No, they got second. 2005, 2006, they were second in both years.
Yeah, not surprising, I don't think.
Yeah.
But just get their act together. Anyway, so let's talk about inflation. So Turkey at 70%. News here in Australia is not so good. Most recent inflation number came in at 4%, up from 3.6. Now, you and I both sat down at the start of the year with all of these expectations on rate cut. That story is not playing out now, and the markets are certainly starting to actually pencil in a rate rise.
Yeah, you'd think so.
Yeah, you would think so. Inflation is proving stickier in Australia than many people had thought. I think it's worth pointing out as well, though, unfortunately, some of the biggest contributors to inflation are like essential spending. And so the fear is that a rate rise or two is really not going to have the, immediate effect that it needs to have when you've got things like power or utilities, housing, essentially food,
transport,
things that people have to spend money on. So really tricky situation here. And when you look at what's happened globally, where interest rates got to above 5% in the US and the UK, both of these countries are now much, much closer, if not already in the 2 to 3% inflation band that their central banks are aiming for. So,
but do you not hear the internal inconsistency in your argument there?
Yeah. No, it's super tricky. But I think maybe it just needs to get so high that it just flattens it.
Well, yeah,
which is so difficult. But
I mean, this is the argument why interest rates aren't the only policy to fight inflation, and we need a fiscal response, not just a monetary response. The fiscal response being from the government.
Yeah.
Jim Chalmers' $300 energy supplement.
Yeah.
Probably not. It'll have a minor impact in the inflation reading after we get it, but it's not structural.
No. And we've also just, at time of recording, we've just ticked over financial new year. 13.2 million people, I think, have now just got tax cuts as well. So tricky environment. I think both New South Wales and federal budgets are also certainly expansionary in terms of spending. So, yeah, I think there's this battle between government and RBA at the moment and how they can do it. But just to close out inflation, the US is now 2.6%, down from 2.7%, and the UK hit their 2% as well. So, they're now talking rate cuts. And here we are talking rate rises.
Yeah,
so.
well, isn't the whole conspiracy theory... Well, it's not a conspiracy, but isn't the whole thing that Joe Biden wants one interest rate cut before the election?
Yeah. Will he get it, mate? That's something you were back for, which was the US presidential debate. Let's not get into that.
Change him.
That was awful.
You can't run campaigns out of fear.
No.
You can't run campaigns out of fear of what the alternative might be. He is a net negative. Let the man retire with dignity.
Yes, move him on. Anyway, other headlines, Ren. Surely this made it all the way across to Turkey, and that is NVIDIA. It had one of the best runs. In fact, it took the number one spot as the world's most valuable company at one point. I think you were probably up in a hot air balloon at that point, with a $3.4 trillion market cap taking the crown from Microsoft and Apple. Subsequently, it did have its the worst 3-day stretch in stock market history, losing $500 billion, but since has steadied.
Yes.
So it's been a wild roller coaster, making headlines, as you would expect. And to close it out, Dutton's nuclear dream. He's gone public with wanting to put 7 nuclear power plants in Australia by 2050, all paid for by government.
How much?
Billions.
No, but how much?
I actually can't remember.
No, he doesn't know either.
That's right. He had a one page.
It hasn't been cost. It would be costed before the next election. Is what I heard.
That's right. Yeah, and he had a 1-page diagram of what it would look like down in Lithgow.
The nuclear reactor.
Yeah, they got it made up. It looks quite nice.
Split the isotope.
So that made a lot of headlines, and as did Elon Musk. Shareholders approved. Or gave approval of his $56 billion pay package, but it doesn't actually mean anything because the court still needs to come in and overturn it.
Right.
Which I haven't actually kept up with that headline because it doesn't really mean much.
It's interesting, from a purely not talking about the Elon situation directly, but just talking about business operations and regulatory and legal overreach, the court shouldn't be able to tell a business what it can pay its employees.
It's America.
From a philosophical point of view.
Yeah.
Obviously, the $56 billion, the size of this pay package, obviously colours the debate around the pay package.
Definitely. Yeah. So he was obviously happy. There's a lot of memes going around with him dancing on stage when that news came through. I kind of sit on his side, to be honest.
Really?
I think, look.
You are a big Elon guy.
No. Look, outside of him being an absolute turkey, I think that if you set the targets and you create hundreds of billions of dollars of shareholder value, then you can't just backtrack just because all of a sudden it seems ridiculous.
Yeah, I mean, that's the problem with this whole debate. It's not a pay packet. It's not like you and I, well, we're a bad example because we run Equity Mates, but it's not like, when I worked at Coles, I would negotiate a pay rise with my boss. That's not, Elon didn't negotiate a $56 billion pay rise here. There were a set of incentives set for him by the board, which Tesla then absolutely blew past.
Anyway, so time will tell if the court overturns that. I think that's now the next step for him. But I think it's a good point as well, Ren, to remind the Equity Mates community that we've just relaunched the Equity Mates email now that we're all back on deck. We are focusing more on the news headlines that matter to us. And we are doing that on a daily basis now.
Yes.
So head across to our website, or there'll be a link in the show notes to sign up. You'll get the key market headlines as well as a community question or a bit of a deep dive on things that are interesting and that we're reading throughout the week as well. So make sure you head across and sign up to that.
Book Club. Ren's reading the book, so Bryce doesn't have to.
Nice.
Yes.
We're back.
Yes, we're back for book club.
Holiday reading.
Yep, a holiday reading. Nothing better than reading about investing while in the Mediterranean. Would suggest it. But Jim Simons, the founder of Renaissance Technologies, one of the best investment funds to ever do it. He died earlier this year, so we thought it was time to read the book about him, The Man Who Solved the Market, how Jim Simons launched the quant revolution. And I've got 4 takeaways. So
Great.
four big things. We're going to do this listicle style.
Love it.
First big takeaway, the power of teams.
Okay.
Now, one of my big gripes with most business books is this Americanized view of business, this Ayn Randian, great man theory of business, where it's a solo entrepreneur, it's Elon Musk or Jeff Bezos that builds this multi-billion-dollar company, which is not how business works. Business is a team sport, and even the best entrepreneurs only get to where they are because of the teams that they build around them.
Okay.
And if you want to debate me about that, let's do it in another segment. But this book really makes it clear how much of a team effort it was. In huge swaths of it, Jim Simons isn't even a main character. There's, like Lenny Baum and James Axe, who developed Renaissance first trading models, Robert Mercer, who's a controversial figure, and Peter Brown, who figured out how to apply their trading models to the stock market, to equities, which is really when they sort of could scale effectively.
What were they applying it to beforehand?
Bonds, commodities, futures, other markets. Yeah. So I think what I love about
Renaissance?
Yeah,
right.
So the thing is, the stock market is so much bigger and so much more liquid that the scale that they got to, trading billions and billions of dollars, they couldn't have got that scale if they didn't figure out the stock market. Yeah. So that's my first takeaway, the power of teams and the importance of teams, and forget this Americanized view of the solo entrepreneur.
Great.
Second big takeaway, how Renaissance made their money. So for context, they delivered 66% a year after fees between 1988 and 2018.
It's unbelievable.
A record that will probably never be matched in terms of absolute returns over a 30-year period. So how did they actually do it? So they sucked in huge amounts of data. That was really their first thing. So Jim Simons and a lot of the guys were all mathematicians. Jim Simons also worked for the NSA and broke codes for a number of years. And then he applied a lot of what he did there to the stock market. He was a professor of maths at Stony Brook University until he was 40. And then he was like, maybe I can figure the stock market out.
Nice. Nice. This was his second act.
Yeah. Third act, I guess, after the NSA, but that was still as a mathematician.
Maybe I can crack the stock market, and then for 30 years did 66% a year.
Yeah. He had a good team around him.
That is unbelievable.
So they found huge amounts of statistical data, and then they looked for statistical correlations. If this happens, how does it react? Or like even not a correlation, like a subsequent event. So when a stock falls 4%, what happens the day after? And stuff like that. And so they were just like crunching an ungodly amount of data, especially an ungodly amount of data for the 1980s, and just finding correlations. So they couldn't even explain the why with a lot of these correlations. It was just
doesn't matter.
Find the correlation, and is it a statistically significant and predictable correlation? Does it happen every time? In the early 2000s, they were making between 150,000 and 300,000 trades per day.
Holy shit.
Yeah. But they're not high-frequency traders. So if you've read Flash Boys or you've heard about high-frequency traders who essentially front-run an order, they'll get in front of it and make a tiny little spread and then sell it on. That's not what these guys were doing. They were just trading a heap. Robert Mercer was once quoted as saying, "We're right 50.75% of the time."
Wow.
So it was just over half. Yeah, just a pass mark if you're at university. And then they just leveraged. They figured it out. They figured out how to make money, and they just leveraged. Traditional funds were sort of 7-to-1 leverage. That's what you might sort of find, at least according to this book. By the early 2000s, banks were willing to let Renaissance lever up 20-to-1.
Shit.
So in 2002, they had $5 billion of investors' money, but they were trading $60 billion, which isn't even 20 times leverage. So they could have gone more.
And so this was just all done completely by computer. That was it. They just plugged in if this happens, make a trade. If this happens, make a trade.
So
if this happens, make a trade.
originally the brokers weren't sophisticated enough, so it was the computer was spitting out what they should do, and then they were calling. But eventually,
you can't do that 300,000 times a day.
So that was only enabled by technology improving.
Wow.
Yeah.
Wow.
So that's the second one, how they made money.
Have they ever... Sorry, keep going. I lost at the end.
Okay. My third big takeaway, that what they did changed the world. So they invented quantitative investing, essentially. They were the pioneers of it. They weren't the only ones that were doing it at the time. D.E. Shaw were another firm that were doing something similar at the time. People who are familiar with Amazon's history might recognize that name. That's where Bezos worked before he left to start Amazon. And also long-term capital management were doing something similar. They're famous for blowing up in spectacular fashion. But so there were others trying to do it, getting just ungodly amounts of maths PhDs in a room and trying to figure the market out. Renaissance just did it the best. But by 2019, quant trades were almost a third of all stock market trades.
Wow.
So it just changed what they did changed the stock market. And that 2019 level was more than double 2013 levels.
Wow.
So you can just see how quickly it's growing.
Yeah. Any stats on what it is today?
No.
Yeah. You'd think a lot higher.
Yeah, definitely.
Yeah.
Here's a fun fact. This is just about the amount of data being created. IBM estimate that 90% of the world's data sets have been created in the last 2 years.
Wow.
And that 40 zettabytes, which is 40 trillion gigabytes of data was created by 2020, which was a 3-fold increase from 2005.
Wow. So it's like the size of compute gets halves every 2 years or something?
Moore's law?
Yeah,
the
Moore's
speed
law.
of compute.
Yeah, it's like the same here. Like the increase in data is just going to be exponential year on year. Yeah.
Okay, so that's my third one, that what they did changed the world. And then my fourth takeaway is the effect of money. So this is where the Robert Mercer story comes to the forefront. And his name may be familiar for US political watchers because he was the big backer of Donald Trump early, the billionaire backer early. A lot of billionaires jumped on board later, but Robert Mercer was the true believer. And he was a true believer. They're in big fundraising circles. A lot of people talk about political donations and then talk about what the donor expects, access or whatever. But everyone couldn't understand Robert Mercer because he was an ideological warrior. He gave money because he truly believed, not because of what it would do.
Yeah.
But here's some of the things he believed. He doesn't believe in man-made climate change.
Good. Good.
He argued that African Americans were better off before the civil rights movement.
Okay.
And then a whole bunch of gun control, arming teachers and, good guy with the only thing that stops a bad guy with a gun is a good guy with a gun. All of the...
Dangerous.
He's a piece, essentially.
Yeah.
Good mathematician by the sounds of it. But but he funded Breitbart when it was Andrew Breitbart. So he gave him a heap of money, and then when Breitbart died, he backed Steve Bannon to take it over. And so he was a big backer of Steve Bannon. And he became a central figure in Trump's campaign in 2016, not just because of the money, but also because when Trump's campaign was really struggling, he made the introductions to Bannon and Kellyanne Conway and got them on the campaign.
Oh, God.
Two figures who became, central to Trump's success.
Yeah, yeah.
So the effect of money. Robert Mercer... He didn't have money before this. He makes his money from Renaissance.
Yeah.
And just uses it in the most destructive ways.
Yes.
Jim Simons, on the other hand, I think used his money in really interesting ways. So the Simons Foundation emerged as America's second largest private funder of research in basic science. Mm-hmm. He helped found Math for America, and I love this model. So what they did was they gave a $15,000 stipend to the top 1,000 maths and science teachers in New York City. So to stop them going to
somewhere else,
private companies or anything like that, they literally just topped up their pay and gave them an extra $15,000. One, I just think that's a great use of like direct philanthropy. Like, we recognize the value of teachers. We want to keep them in the field. How can we directly just incentivize them to stay? Secondly, all I could think was, imagine being in that top 1,000 list and then falling off.
Yeah,
like
you're 1,001. Yeah, damn it. That's the incentive, I guess.
Yeah.
Stay there.
But like that.
Stay sharp.
It's an interesting model of, you don't really see philanthropy that direct, where it's like, we're just going to give you cash to keep doing what you're doing. And then he also paid $75 million for an observatory to search for the origins of the Big Bang, but he explicitly doesn't believe in the Big Bang Theory.
Oh, he's just prove it.
He thinks, he's like, this is going to be a win-win. Either we'll prove it and we'll get a Nobel Prize, or we won't prove it and that will go towards my theory.
Yeah.
He subscribes to the bouncing model where time doesn't have a fixed starting point.
Oh, goodness.
So let's not get into that now. But if I never knew about this alternative theory of time and existence. So something for people to Google.
Nice. So there's 4 key things. My big question, though, at the end of it is, so he's passed away.
Yeah.
Renaissance still exists and is still doing its thing.
Yeah.
It's an incredibly private company. You can't put money in it yourself. I think there's
so there's the Medallion Fund, which is employees only, which is like their superstar fund. And then there's a couple of hedge funds available to institutional investors. But part of the book is that all the best stuff isn't used in the funds for others, and that was like a point of tension anyway.
Probably the most valuable thing in all of that is the algos that they've got in the Medallion Fund. How are they, like, was there any talk about how they keep that private, what happens when he dies, so there was and when employees left, because they have like watertight non-competes and stuff, but then a couple got out of them or like didn't sign them in the first place, there was there's leaks. There hasn't been major leaks because all you need to do is be an employer, leave, wait it out and spill the beans.
No, because there's non-compete periods and then non-disclosure periods.
Oh, okay. I
see. You're still signed up to it.
Yeah.
You'd be lifelong.
For a lifetime. Yeah. God, I would love to know. Imagine being part of that employee list as well. They'd all be millionaires.
Well, a lot of them are billionaires.
Yeah,
a lot of them are distorting the outcomes of the US presidential election.
Oh, yeah. Anyway, well, thank you, Ren. Firstly, if you have a book that you would like to submit for us to do a book club, then head to equitymates.com/contact. We do have a bit of a list to get through. So, Ren, do we have a book for the next month?
We do, one that is particularly relevant to us here at Equity Mates, but I'm sure we'll have some good investing lessons. The book is by Ben Smith and it's called Traffic: Genius, Rivalry and Delusion in the $1 billion Race to Go Viral.
Oh, wow. Okay.
Yeah, so it's about the rise of the BuzzFeeds, the fall of Gawker, HuffPost, like all of those sort of 2010s internet giants. The rise and the fall.
The rise of Equity Mates. Nice. All right.
Maybe we'll finally go viral.
Nice. Well, we'll put a link to the show notes. We'll put a link in the show notes to that book if you'd like to download it as well and join us in a month as we review it. But we're going to take a quick break, and on the other side, we're going to answer a community question around feeling anxious about where you're currently at with your super fund. We'll be right back.
Let's ask the community.
Hey, Equity Mate.
I just had a question.
Hey, Bryce, I've got a question.
Answered.
Welcome back to Equity Mates. It is that time for a community question. Now, Ren, this one, we've just done a lot of content around superannuation. We did the series with Vanguard about 5 or 6 weeks ago that really... The aim was to try and, I guess, encourage people to engage and think about their superannuation fund if they weren't. And we went through ways in which you can easily do that and what you can do to make sure you're staying on track and those sorts of things. We've had a lot of great feedback, so thank you for everyone to tuning into that. And it's been awesome to see the Facebook community also have a lot of discussion around people taking action with their super fund. But there was some, I guess, commentary around people feeling a little bit anxious that they're later on in life and feel like that we were sort of suggesting that if you hadn't done anything early days, then you'd be missing out. So this question has come in from a community member. They said, I listened to your recent podcast regarding super, and to be honest, I feel really anxious about it. After listening to your podcast, I've been playing with a super calculator. The 2 million that you were talking about in the pod made me very anxious. If I push my retirement age to 70 and add my wife's expected retirement super amount, we're far off $2 million. I know you can't give any personal advice, but I was just wondering if there were any thoughts or tips that we could do to at least get closer to the aimed amount. So we just want to, I guess, address that feeling that some might be having around not having enough or being on track, because we certainly didn't want that to be the outcome of the content that we were doing. So I guess we start with the acknowledging that it can be anxiety inducing.
Yeah.
There are things to keep in mind to reduce that as much as possible. So firstly, I think it's worth noting the government has a social safety net with the aged pension. So you do have a backup.
So I think, that's the first important thing to keep in mind. The second thing is, I guess we could call it the duality of retirement planning. There's sort of two different numbers that are thrown around. So the 2 million that we spoke about was a function of the retirement planning rule, where they say aim for between 66 and 80% of your pre-retirement salary, and the 4% rule, which says you can expect to be able to draw down or draw a salary of 4% of your investment, of your retirement nest egg. And so that's sort of where people get in a number in the millions or 2 million to sort of think about as their retirement target. But then also, and this is where the duality of it comes in, the numbers from retirement organisations about what you need for a comfortable retirement are so much less than that 2 million. So these are the current balances. So for today, remember, there will be a bit of inflation between now and when you retire, but for today, the Association of Superannuation Funds of Australia say for a comfortable retirement, a single person needs $595,000 and a couple needs $690,000. So I think the important thing to keep in mind is that if you're hearing numbers in the millions and you're not thinking you're going to get there, the balance required for a comfortable retirement is far lower than that. So keep that in mind. But in saying that, if your super balance isn't where it needs to be, there are things that you can do. And the best way to address the anxiety, I think, is probably to lean into it and to say, all right, well, what can I do today to make myself feel better? So where do we start there?
Well, I think the first thing is get financial advice if you can afford it.
Yeah. Really important to stress here that a lot of the big super funds offer free financial advice about your superannuation.
Yeah.
And they will be more than happy to help you work through how you can have more in your super.
Yeah.
Because that will mean they have more to invest.
Yes, yeah.
Like that's kind of what they're there for, to help you with your super.
Yeah.
So like I know Australian Super have it and you can call up or you can book a call, and I know a bunch of the other ones do it as well. So if you feel like you can't afford financial advice because it is expensive, your super fund may have a subsidised version.
Option, yeah. The second thing is to consider that a lot of retirement planning organisations use terminologies like comfortable, modest and pension lifestyles in retirement. And even in the example we just gave, we use the word comfortable. So I think it's looking at each of those and understanding, to what you said, Ren, what are the trade-offs that you need to do now versus later, depending on what type of lifestyle that you want in retirement. And that may then bring to light actually what you need as a balance, and it might be far more achievable than you perhaps thought it was. So just setting the time to do that and really working through that planning process.
Yeah, so to put numbers to that, the Association of Super Funds of Australia estimate that I gave earlier, $595K for a single person and $690K for a couple, that's for a comfortable lifestyle. For a modest lifestyle, they say $100,000.
Really?
Yeah, because the assumption is that most of your basic lifestyle needs are met by the age pension.
Yes.
So, yeah, like having $100,000 in your super when you retire today, they still say you could cover all your basic needs and live a modest lifestyle. So I think, the numbers can be a lot lower than what you might think they would be.
Yeah. And I think that just is the third point. It's just acting now. Even if you think you're too late, there's things that you can do in your 40s or 50s. You still do have like a couple of decades of compounding in front of you. So don't think that you've missed the boat. That's probably the worst mindset that you can have. But just understanding all those things, like understanding comfortable, modest, like those are really important things that the earlier you understand that, and leaning into it, the better decisions you can make going forward.
Yeah, and I think a lot of people think, I've only got until I'm 65, but your super is then the money that needs to last for your retirement. And it's not like at 65 you'll pull all 100% of it out of investments and put it in, a term deposit or something that pays you a annuity. That money is going to last into your 80s or your 90s, hopefully. So it's like there's still decades in your retirement where you will have some portion of it invested. And so I think even if you feel like you might only have 10 or 20 years to retirement, you're hopefully going to have 10 or 20 years in retirement as well. So there is still a lot of time. And so I think doing everything you can now, it will still be worth it.
Yeah.
And in terms of what those things are, those things that you can do to boost your balance, I mean, the big ones are salary sacrifice, the extra contributions from your before pay tax, and that'll be up to like the concessional contribution cap, which this year is, well, at least last financial year was 27.5.
Yep.
After tax contributions, so this is contributing above the cap. And then you can also do spousal contributions. So a few of the questions we got, a spouse is working part-time or not working at all. You can also contribute more to their super, and then there's a tax benefit there as well. So if you really want to stretch your combined superannuation, make sure you're both maximising the tax benefits available, even if only one of you are working. And look, after all that, we know that there'll be some people that have done all the work, have done all the planning, have maximised what they can afford to put in their super, and still feel like there may not be enough. I think it's probably worth just going back to where we started, which is we have a social safety net in this country. The age pension is there. You're not going to be destitute in retirement. And doing everything you can while you're working you're going to put yourself in a better situation.
Well, that's a great spot to leave it. If you'd like to submit a question for us to answer on the show, head to equitymates.com/contact, and there is a page there where you can leave your question. But as I said at the start, it's great to see so many people in the Equity Mates discussion group on Facebook talking about their journey with superannuation and engaging with their super funds. So come and join us to continue that conversation. But Ren, welcome back. It's good to have you in the studio. Plenty more content coming up. Next episode, we have an interview with Michael Frazis.
Nice.
To talk all things growth companies. Yes. So, yes.
Well, probably the most growth-orientated investor we've spoken to.
Yeah, big time. Well, yeah, so I'm really looking forward to that one. But we'll leave it there. We'll pick it up next episode.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.